All right, let's talk about government shutdowns in the stock market. Because every time headlines scream shutdown, investors start to panic. But should you? Here's the myth. A government shutdown means chaos in the markets and your portfolio is doomed. But the reality, is actually a lot less dramatic than you might think. First off, the stock market doesn't close during a shutdown. The New York Stock Exchange, NASDAQ, they keep running like usual. What does change, though, is the SEC. They basically go into skeleton mode, handling only the essentials. That means things like new IPOs filings get put on ice for a bit. Now, the moment a shutdown hits, you'll probably see a risk-off reaction. Investors get a little jittery, maybe sell off some stocks and flock to safer assets like treasury bonds. That can push bond prices up and yields down. But here's the thing. Historically, these sell-offs are usually brief. The market might wobble for a few days, but it rarely crashes just because of a shutdown. What does spike, though, is volatility. Political uncertainty makes people nervous, and key government economic data releases can get delayed. That means investors and even the Fed are flying a little bit blind. Certain sectors feel the heat more than others. Government contractors, defense industry firms, a shutdown can mean delayed payments or delayed projects, and that can hit your stock price. And if you're a company hoping to go public, well, you'll have to wait. So what's happened in the past? Mixed results. In 2013, the S&P 500 dipped, but during the 2018 and 2019 shutdown, it actually went up. The takeaway, the market tends to look past the noise and focus on the bigger picture. Earnings, interest rates, investors who stayed the course were often rewarded with gains over the next year. But here's the caveat. If a shutdown drags on for weeks or even months, it can start to erode confidence, especially if the economy is already shaky or stocks are priced high. That's when things could get more serious. So don't let the headlines scare you. Short-term volatility is normal, but history shows the market is pretty resilient. Stay focused on your long-term plan and don't let political drama throw you off your game. Thanks for watching.